Bitcoin is a digital currency, money that exists only online, not as coins or bills. It lets people send and receive value directly anywhere in the world without banks or middlemen. Bitcoin's decentralized network is open to anyone with internet access, and transactions are recorded on a public ledger called the blockchain. No single company or government controls it. Instead, a global community maintains the system. This gives users more control over their money and challenges the traditional financial system. As we explore Bitcoin's origins and mechanics, we'll see how it's reshaping our ideas about money and financial freedom. The story of Bitcoin is, in many ways, the story of our digital age. Bitcoin was born from the ashes of the 2008 financial crisis, a time when the world watched in disbelief as major banks collapsed and markets spiraled out of control. Trust in banks and governments hit rock bottom, leaving ordinary people feeling powerless and uncertain about the future of their savings. In response to this turmoil, an individual or group using the name Satoshi Nakamoto published a groundbreaking paper online, outlining a radical new kind of money: Bitcoin. This new system would be open to anyone, transparent, secure, and most importantly, free from the control of any single authority or government. On January 3, 2009, Nakamoto launched the Bitcoin network, embedding a newspaper headline about government bank bailouts in its very first block, a powerful statement about the need for change. Early adopters were cryptographers, programmers, and tech enthusiasts who nurtured Bitcoin's fragile beginnings in online forums and chat rooms, debating its potential and risks. At first, most people dismissed it as a fringe experiment, something too strange or risky to ever catch on. Yet, from these humble and uncertain beginnings, Bitcoin steadily grew, spreading across borders and inspiring a new wave of financial innovation. Its creation marked the start of a quiet revolution, one that would forever change how we think about money, value, and trust in the digital age. At the heart of Bitcoin lies the blockchain, a revolutionary public digital ledger that is shared and synchronized across thousands of computers worldwide. This decentralized network ensures that no single entity controls the system, making it open and accessible to anyone, anywhere. Every transaction made with Bitcoin is grouped together into a block. Each block is cryptographically linked to the one before it, forming a continuous, unbreakable chain. Once added, these records become permanent and tamper-proof, creating a trustworthy history of all activity. To use Bitcoin, people store their coins in digital wallets. These wallets are protected by private keys, unique codes that only the owner controls. This means only you can access and spend your Bitcoin, giving you full control over your funds. New Bitcoins are created through a process called mining. Powerful computers compete to solve complex mathematical puzzles, which helps confirm and secure transactions. As a reward for their work, miners receive newly minted coins. This mining process not only introduces new Bitcoin into circulation, but also keeps the network safe from fraud and attacks. The rate at which new coins are created is predictable and decreases over time. Unlike traditional money, only 21 million Bitcoins will ever exist. This built-in limit makes Bitcoin scarce by design, similar to precious metals like gold. Every 4 years, the reward for mining new blocks is cut in half, a process called halving. This slows the creation of new coins and increases scarcity over time. This programmed scarcity is what sets Bitcoin apart from traditional currencies, which governments can print in unlimited amounts, often leading to inflation. Thanks to the blockchain's transparency and robust security, Bitcoin has become a groundbreaking digital currency, trusted by millions around the world. Unlike traditional money, which is controlled by central banks and governments, Bitcoin is decentralized. No single authority can print more or freeze accounts. Its fixed supply protects against inflation, making it a digital alternative to gold. Sending money internationally with Bitcoin is faster and often cheaper than using banks, bypassing costly intermediaries. But with greater control comes greater responsibility. If you lose your private key or send Bitcoin to the wrong address, there's no way to recover it. There's no customer service. Users must secure their own assets. Bitcoin offers financial sovereignty, but also demands personal vigilance. It's a new paradigm, ultimate ownership, but ultimate responsibility. This shift is changing how we think about and use money. Many people discover Bitcoin as an investment, drawn by its potential for high returns and high risk. Buying Bitcoin is now easier than ever through exchanges and financial apps, but its price is famously volatile, with dramatic swings driven by news, regulations, and market sentiment. Investors range from short-term traders chasing quick profits to long-term hodlers who believe in Bitcoin's future. Regulatory uncertainty adds another layer of risk as governments worldwide debate how to handle cryptocurrencies. New rules could boost or hinder Bitcoin's growth. Successful investing requires research, caution, and an eye on global policy. Bitcoin's investment story is as much about risk management as it is about opportunity. Bitcoin is gaining traction. More companies accept it, and some even hold it as a reserve asset. From small businesses to global corporations, the willingness to transact in Bitcoin is steadily increasing, signaling a shift in how value is exchanged worldwide. This growing acceptance is not just a trend, it's a sign that digital currencies are becoming a part of everyday financial life. El Salvador made Bitcoin legal tender, aiming to expand financial access and lower remittance costs. This bold move has sparked global conversations about the potential for Bitcoin to empower people who lack access to traditional banking and to make cross-border payments faster and more affordable for families. Other countries are exploring digital currencies in response to Bitcoin's rise. Governments and central banks are studying how digital assets could reshape their economies, and some are even piloting their own versions of digital money. The community debates Bitcoin's true purpose. Is it a store of value like digital gold or a currency for everyday use? These discussions reflect the diversity of opinions and visions for Bitcoin's future as people weigh its strengths and limitations. Some see it as a way to preserve wealth. Others envision it as a tool for daily transactions. For some, Bitcoin is a hedge against inflation, while for others, it's a means to participate in a new, open financial system. Solutions like the Lightning Network aim to make Bitcoin faster and cheaper for small payments. These innovations are designed to help Bitcoin scale, making it practical for everything from buying coffee to sending money across the globe. How Bitcoin is used will shape its future role in society. Its adoption by individuals, businesses, and even governments will determine whether it becomes a mainstream currency or remains a niche asset. Its evolution depends on adoption, technology, and the needs of its users. As the world continues to experiment with Bitcoin, its true purpose will be defined by the people who use it and the problems it helps solve. Bitcoin's future is uncertain but full of possibility. It could become a mainstream store of value, coexisting with traditional currencies, or power a new, decentralized financial system. Challenges remain. Energy use, regulatory threats, and technical hurdles must be addressed. Its success depends on developers, investors, businesses, and governments. Bitcoin has already changed how we think about money and financial freedom. Whether it becomes the world's money or a niche asset, its impact is undeniable. The journey of Bitcoin is still being written, and it's one of the defining stories of our time.